Hey, good morning, everyone. Brian Hoops here with Midwest Market Solutions Market Insider TV. This is our opening commentary on Monday morning, November the 11th. Happy Veterans Day. Thank you to all the veterans who served out there. Great day to remember our veterans. So we'll take a look at our overnight markets, some expectations for the day ahead. We are open normal hours. A lot of confusion on this, I think. I just talked to a client who thought maybe the overnight was open and we would not be open here, but we are trading normal in the grains and the livestock today. The only thing that's different is it's a banking holiday, it's a government holiday, so no mail today, no margin calls type day. So it should be a great day if you don't have to worry about those. It's a government holiday, but the markets fully trading and open. So let's take a look at our overnight markets. I'll be doing RFD TV this morning, 8:15. In fact, I'll be doing it Monday, Wednesday, Thursday, and Friday of this week. The U.S. dollar is stronger this morning, 67 points higher. It had a correction. Now it's resuming that uptrend in the market. We expect this to continue as we're up to 105.50. The crude oil is down sharply. Natural gas and crude oil sometimes will trade in the same direction, but look at natural gas spiking here today, while crude oil in a free fall, $1.75 lower. This is a big move in natural gas, 5.70, 5.7% there. 2.5% losses in crude oil is considered pretty large, and concerns about the demand for crude is weighing on this market. Stock market is a little firmer in here, while gold and silver lag with the strength in the dollar. Corn down a penny and a quarter overnight. Beans 4 3/4 higher along with meal. And then look at the oats down almost a dime. Wheat is down 11 to 13 cents in Chicago and in Kansas City. So we'll get into the news here and some of the features that we're driving the markets. Make sure you follow us on Twitter, Midwest Markets, and at Brian Hoops, and sign up for our text service to get you the latest market information. So weather in South America, it's really nearly ideal for corn and soybean seedings, and then for development. Good rains are forecast for the next 7 days in both Argentina and in Brazil, and that makes it just nearly perfect growing conditions there. Here in the U.S., mostly dry across the Corn Belt. Any harvest that needs to be done should be able to get finished here relatively soon. Field work should be ongoing. We see a lot of moisture across the hard red winter wheat areas. Best rains since last spring. That's going to improve hard red wheat conditions before dormancy. So we don't have any export inspections today, no export sales report, private sales this morning. And then on this afternoon, there will be no crop progress numbers because of the holidays. So we'll get those conditions tomorrow morning, but I expect they will be improved tomorrow and will continue to improve as there's more rain forecast later this weekend. Planting in Brazil, we talked about how good growing conditions were. We don't have good to excellent ratings, but we have progress. Soybean planting, 69% done. That's ahead of average. Remember, they were behind at first. Now they've caught up and moved ahead of average. And the first corn planting in Brazil, 81% done. The average is 79%. So we are improving there as far as our pace. And we're down a little bit from a year ago levels, but that's not a concern. I know one time we had some concerns that maybe this corn crop would get pushed back because of late soybean harvest. I don't think that's necessarily going to be the case, as soybean planting and the first corn crop is average to faster than normal pace. So on Friday, this came out almost simultaneously to the supply and demand report. The report was very friendly, especially for soybeans, but it was also announced that the President-elect Trump has given his nod to Robert Lighthizer as U.S. trade negotiator. And if you remember, and the trade did, that Lighthizer was one of the trade negotiators with China during the first Trump administration. We had the tariff wars. That's, I think, what pulled soybeans off of their highs was concerns that we may be going into another war with China on tariffs. Another name to keep in the back of your mind is Greg Dowd, who was, I think, the assistant to Lighthizer during this time period, and he tried to work under the Biden administration and ended up working with the Milk Federation instead, due to some conflicts with how he believed President Biden handled negotiations. So if he comes back to Trump, and I wouldn't be surprised if he does, this is pretty good indication of what the plan going forward is for negotiations with China. Needless to say, a lot of these exports that we've seen recently, Chinese purchases and the ones to unknown destinations that end up being China, have a very high chance of being canceled sometime down the road here this winter. Okay, so if you look at technicals, we did on Friday on our closing segment, there's a potential double top on the December corn chart at 434. That was the high we made up on Friday, 434.5 or 3/4, but a double top there. As always with any of these markets, when you have a big day, the key is can you get some follow through? We haven't had any follow through the upside in the overnight. Wheat has turned lower and taken out Friday's lows. You know, if corn and beans take out the lows from Friday, that's certainly going to be technically bearish, and taking out the highs would be very friendly for these markets. An inside day would tell us it's consolidation and possible change of trend. Do want to note that last year, very similar to this time frame, November the 15th, grains peaked amid favorable growing conditions in South America. In fact, if you remember, it wasn't all that great of growing conditions in Argentina, but in Brazil, it was very good growing conditions, very dry in Argentina last year, and soybeans fell well over $1 by the year's end, just off of that forecast. And right now, Argentina and Brazil both have very good growing conditions, so I'm very concerned we could see a pullback into the end of the year after all this excitement that we've seen with the supply and demand report. So what does oats know? Well, they've had a reversal on November the 4th and a 65-cent drop since that reversal high. The old trading adage is oats knows where the grain markets goes, and even though it's not English grammatically correct, but we're still looking at the possibility that if the oat market is leading the parade here, giving us indications, this could happen to corn and soybeans very soon as well. Cash cattle trade last week in the South was 187 live, $3 lower than a week ago. And in the North, it was 186, 188 live, 294 dress. That's $2 weaker, both live and dress. So cash trade down this last week. We expect to be steady to lower again this week until packers start cutting kills, propping up the boxes, propping up their box beef margins. They have a negative about $59 a head as far as margins go. So certainly a little bearish fundamentals coming into this cattle market. Hope you have a great day, everyone, and good luck, good trading as always. This has been Brian Hoops from Midwest Markets. We'll talk to you soon.